On the Natgas chart, we have a 5-wave move up from the swing low in February 24. So we talked about it in previous updates that this indicates that a major low could have formed 2024, but it wasn't quite clear whether we need one more high in wave 1 or if the top was already in. Minimum requirements were already fulfilled. I think I preferred slightly another high, but the market doesn't want to give us that one more high. It seems like it wants to complete that correction more directly, which will likely lead to a completion of the wave 2, probably in this area around $2.40. So if we zoom in a little bit into the 4-hour chart, then you see that this wave 1 likely topped in March. We have an A wave down. We have a corrective rally in a B wave. And based on that, we could calculate a target for wave C. I think we did that already in previous updates. And that's taking the length of the wave A and then projecting it out for a wave C. And they often have the same length. So the price now also broke below previous support. There was no bounce whatsoever. Broke below it. We're now approaching Fibonacci support. However, the 50% retracement level there around $2.76. So again, I'm tracking this still as a potential C wave down in the white count. That white count hasn't changed. I've removed the yellow count, which was the previously short-term bullish alternative before wave 2 would start. But seems like we get that wave 2 more directly. So the move down, I would see it as an ending diagonal in wave 3. It doesn't look particularly impulsive, which means the third wave here could be nearly done. We measure the targets for the internal third wave. So we take the length of the wave 1. We go to the high of the wave 2 there. And then, well, we've reached 100% extension. Technically, this is enough for the third wave. Bit lower would be ideal, maybe to 259, then wave 4, then wave 5, and that would fit very well with this idea that around 240, where also the 61.8 retracement is located, that this is where we might actually form a low. Now, I think we should add resistance for the fourth wave corrective bounce here, which, if it's a diagonal, is located between, so we already see a bit of a bounce there now that we've reached support. So yeah, it's this area. So as long as we now stay below 326, I'd say the pressure is down. I would prefer one more low because it would then lead to a completion of a C wave. At the moment, this does not look like a completed C wave. And if we break above resistance, it probably does not mean that we're in a full-scale breakout. It could mean there is some short-term upside momentum, but it might mean that we're entering a much more complex corrective pattern and that this B wave is extending. So for now, I think we're getting closer to the point where a bounce is likely. This is where it could be, or from 259. This is not enough yet to indicate the fourth wave has started, but if it starts, it should reach this area between $3.06 and $3.26.